Ladies and gentlemen, welcome back to another bullish breakdown. Today I have a very important video over one of our favorite stocks in Him and Hers. Now Him and Hers did just report earnings about an hour ago, and we're going to go ahead and break that down in full. Now Him and Hers is up around 8% after hours, so we do have a good bit of stuff to talk about. I don't want to waste any more time. I want to make this video short and sweet, get all the information to you guys as fast as possible. So make sure you guys do like and subscribe as always. Also, join up on our free Discord, which is linked in bio. We have over 5,000 members over there. Now, let's not waste any more time. Let's go ahead and jump right into this video and talk about Him's earnings. All right, so I tried to make a really cool graphic for you guys. I tried to show off a little bit, ended up wasting about 30 minutes of my time. So I'm just going to go ahead and tell you guys exactly what they did for earnings. Now, the revenue came in about $20 million above the estimate at $599 million, where estimates were at $579 million. Adjusted EBITDA came in at 78 million, where estimates were at 68 million, beating estimates by about 10 million. Now, their gross margin increased to around 74%, which is really, really good. And their subscribers were up around 21% year over year, hitting 2.471 million subscribers, which looks amazing. Now, their quarter four revenue is expected to be at $615 million, which means they are continuing to grow the revenue at a great rate. Now, the only mild thing is that they did miss on EPS. They came in with 6 cents on EPS, and the estimate was about 10 cents. Nothing too crazy there. I do believe that they are doing some investing into the company, which they should talk about in their earnings report on the earnings call. But also with their guidance, the other mild thing to take a look at is they did miss revenue and EBITDA on their full year 2025 guidance. And guys, it is by nothing. It is by the tiniest hair of all hairs. So if they have any kind of beat next quarter, they're going to blow that out of the water. I don't think it's anything to be concerned about. The only thing that you could be questioning is that EPS miss of 4 cents. But at the end of the day, it's a new company. They're growing. They're continuing to invest in their company. So it should really not be anything to worry about. Jumping over to the chart here, you guys can see that Him and Hers is currently up around 7.23% in after hours. Now, taking a look at where the stock was, we actually saw a pullback of around 7% to the downside. Then we saw Hims completely reverse. Now, we did talk about that mild miss on their EPS, so this was most likely the reason for that. Now, seeing that the price did return and is actually returning much higher, being up 7%, is a pretty interesting ordeal, and it is very, very bullish for the stock. Now, as we do zoom out onto the daily time frame here, I am going to go ahead and pull this chart out a little bit. Now, with my targets here, we aren't going to hit either one of these targets because we didn't get a crazy earnings report. So these are going to go out the window, but here were my first two targets for what we were looking at with Hims. I thought that we could work our way up to $50.28, which we still very much can. And if we were to miss, I thought we would have gone down to around $38.90. Now, with us currently sitting at around $47.43 in the after hours, that does bring us back above our 200 EMA, which is most important here on this chart. Now, as you guys do see, right here, when we came in contact with our 200 EMA, we absolutely rocketed off of it. Now, back here, when we came in contact with our 200 EMA, we absolutely rocketed off of it. This was about 160% for Hims in 3 weeks. The stock gained 160% in 3 weeks. That is insane coming off that 200 EMA. And another one right here, as you guys can see, this was really the big start of this overall rally. Back here at around $8 or around $14 was where we were getting entries. And then obviously you guys can see what led to that. Now, with Hims and this current market sentiment, the way that they are looking is not exactly the best. This isn't the most attractive stock out there on the market, but what they do bring is a great product. They have great financials, although they missed on EPS, which like we talked about doesn't mean a whole lot. And I think for the long term, with their telehealth company being one of one and no other company really competing with them on that scale, Hims is really positioning itself to have another massive rally like we have seen off of that 200 EMA. Now, something that I do want to talk about, I'm literally out of breath right here, but what I do want to talk about here is talking a little bit about what we could see with, an ascending triangle type formation. Now, this by no means is very accurate, but if we are to work our way back into this channel, we could see something like this. What I expect to see is really going to be a box play out here. So basically drawing a box around all of this consolidation and then basically taking the move on whichever way we break. So if we do break to the upside and we aren't able to hold the downside right here, now if we are to break to the downside, I'm most likely going to be selling my position here. Although I love the company, I still have still have my trading strategy and I still have rules that I have to follow. And for the upside here, this would be a big indicator here. If we could break this level and finally get on top of it, turning it to support, which I think should have happened already, we could see a move like this. Now, I do expect this move to take us up to around $88 or $108, which are my next two targets. I can't really see around my camera right here, but there's $88 and then $108 all the way up here. I believe that these are our next two targets. I think that the intrinsic value for this stock by the end of next year is going to be at $123, which would put our targets all the way up right there. Now, with the target being all the way up there, I think that this is a very, very good target for this company. Now, about 50% back to the upside just to get back to prior highs. Then from there, about 100% gains to get to our first target, and about 145% gains to our next target, and our final target where I have my intrinsic value, 178%. And like we saw, guys, this could happen in 3 weeks. It really could. Now, back here where we did have the low to this high in about 3 weeks, that was about 176%. So right here, we could be seeing 178.33%. Now, this is not going to happen in 3 weeks. This stock is not going to be $123 in the next 3 weeks. It's not going to happen. End of story. It's not going to happen. Will not happen. But what I am talking about is with this company continuing to grow. When they had this massive influx in price, they were a much different business than they are today. And they're a much better business than they are when that move occurred. So that is the big point that I'm trying to make to you guys, that although we did miss on EPS, the company is still growing. We saw 50% growth in their revenue year over year. That is insanely, insanely bullish. So I can't wait to see HIMS continue to rally. And I am currently sitting on 200 shares at an average price of $40. So this nice little earnings boost did help me out, but I do want to see the stock continue higher. I do want to target at least $88 by the end of Q1 2026.